Hi, gang. I did a new manual, and I just wanted to take a few minutes and add it to the Substack and explain what this is all about. The title of the video you're going to see, which is a preview to this manual, which is the art and science of staying on the right side of the market. We're featuring quantum pitchforks, market structure, percentage change, and trend lines. Most of you have been doing pitchforks for a long time, but I'm going to show you pitchforks in a way that you have never seen it before because we combine the pitchforks with price and time readings, which gives you a very serious edge considering that pitchforks are an excellent tool already to help you with your navigation. But do we really need another teaching on pitchforks? I mean, there's great teachings on pitchforks already. But you have never seen pitchforks do what these things do when you combine it with other factors, such as market structure, breaking of market structure, and we're going to introduce a new tool which works just as well as any of the other tools in my other manuals, is a percentage change. And finally, we're going to talk about trend lines because while this teaching does feature pitchforks, pitchforks are just a feature. It's a technical feature that you learn. The benefit, which is why you're here, is to get the benefit. The benefit is to use whatever tools necessary to keep you on the right side of the market, because that's number one. If you're not on the right side of the market, you have nothing. If you can't get into flow with the market, you have nothing. So what I'm going to give you is an overview of how this works because the manual goes into much greater detail. Okay, so let's get started. Okay, so let's start with breaking structure. Some of you have seen this chart before, but you could say that the trend lines or the pitchforks are market structure. But for those of you who have seen the Smart Money Concepts videos, you know they do something called CHOCH, which is called a change of character. I don't know about you, but I haven't, after all the videos I watch, I never quite figured out how to do a change of character. So what we're going to do here instead is talking about the breaking of structure, because once the structure breaks, then it opens up a new opportunity in the other way that you thought of. Like, here's a great example. This was like the first major example that proved my hypothesis of what would happen when one of my really good vibrations that jump off the chart at you, if it breaks. Okay? So if you've been with me for several years, you know we covered the Bitcoin bear market in 2021. And what ended up happening is that you had a high of 69,000. You remember that. The first low was 42,333, which was a drop of 26,667 points. It was a 66% retracement to the low over here, and it was also 166 days. All of this lined up in the exact right place. Now look what happened. It fizzled and it failed. This should have taken off. This should have went to the moon, but it didn't. So does it mean that these readings don't work? Absolutely not, because we're dealing with quantum physics and non-linear math. We are out of the box. Regardless of what all the fundamentalists on CNBC tell you, markets are truly out of the box. So what ended up happening once the structure broke, and this is what I'm calling the structure, this incredibly great setup. This is 42,333. The break of structure ended up causing Bitcoin to go all the way down to 15,460. Now, your job, if you accept it, is to track these patterns. And I don't care if you're a swing trader, an investor, a 1 minute trader, a scalper, whatever you are, it doesn't matter. If a really good reading breaks, it's a good sign that this reversal isn't going to happen and the trend's going to continue. Now, I'm only showing you part of this. This dropped from 42,000 down to 32,000, and as you know, it went all the way down to 15,000. Okay, well, that's a high profile chart. What about your everyday, day in and day out action? Does it work there too? Well, let's say this. Look over here, the Dow futures chart. On a 4 minute chart, this high was 134 degrees. This low was 0.33% drop. Okay? That's a replication flip because it's basically the same vibration. Only thing is we're using our new indicator here. And if we didn't have the new indicator, we probably wouldn't know this. So that's why this is really important. So it bounces up to the midline of this larger degree pitchfork and fails. Now, never mind the rest of all this other stuff. I'm concentrating right here on the break of structure. When it comes down to here and it breaks, this really good replication flip, it actually drops more points than the whole leg up. Want to stay on the right side of the market? Nobody else is teaching you this stuff because nobody else knows it exists. But if you take to this stuff, you can have yourself a very significant edge, which can make a difference in your trading. Okay. So I showed you a break of structure. This is not a break of structure. This is your example of how replication works with percentage change. Okay, the low that we have on the Dow futures is 300, the range is 322 points down. Later on, when we get a secondary test of the low, there's a lot of things going on here. But the thing that stands out more than anything else, it's down 0.22.5%. Now, in addition, the replication stuff here has the bigger leg being 1.5 times the size of the smaller leg, and from 347 to 397, it's 50 points. Now, here you have a little dinky move, which is down 0.24%, means nothing all by itself until you realize the low to this low here is 25 minutes. Are you starting to see how important this stuff can be to you and the edge that it reveals? Okay. Now, this chart is a historic archive chart going back to the 2008 financial crisis. I'm breaking this down on a daily basis back in, this is 2007 to 2008. This bounce over here is up 8.3%. By itself, it doesn't mean anything until we realize that from this low, this bounce leg is 82 days. It's 82 days. Now, aside from that, we have a 58% retracement, and this ends up at the 58 DG day of the year. So when it lines up, it really lines up. Okay, but what I want you to take from this is up 8.3%, and look where it falls on the pitchfork, comes down to the midline, holds real well. This instance, it violates the trend line, the pitchfork line, but it fails at the 200-day moving average. So you got to be careful of that. None of these things work all the time. And you just have to develop your peripheral vision to see what's going on. Okay, now let's look at another archive chart. This is the 1930 bear market rally up to here, and then it rolled over in that terrible bear from 30 to 32. Okay? We already knew, because I've been showing you this chart for 10 years, that this high came in at the 155th trading day off the top, which was the top of 29, and it was also 154 days up. It's a 52% retracement, but now that I put the number on it, heck, it's also 52% rally. Now what I want to show you is this 52 vibration here. This low over here is 153 days off the 29 bottom. And then look how nicely the pitchfork forms. And it rallies up to the midline. It's a 19% move. And that's important because it's in the margin of error. It's 21 weeks across. Now, you can't see it because of that daily chart. But the fact of the matter is, it's 21 weeks across. It's 19% up. And everything is all working together. And then when it fails, this pitchfork, it goes over this line. The energy, it goes through a portal. The energy changes, and it continues down. So it's all here, all together for you. Finally, I told you that this project is dedicated to keeping you on the right side of the market. Pitchforks don't always work. Now, here's a situation with a trend line, which works perfectly. You can't fit the pitchforks into this. Why is this important? Because the move from this pivot to this pivot is a difference of 5.2%, and that really doesn't mean all that much by itself until you realize that this low here is 52 days off the bottom. So this is just a little taste of what the manual's all about. There's a lot of great stuff in there. We get into great detail on breaking of market structure, percentage change, all the other stuff we do, but helping you stay on the right side of the market and helping you stay in a place where you could navigate better. Because what I've found in a lot of the training sessions that I've done is that a lot of the senior people, they're pretty good with this stuff, but a lot of my beginning to intermediate level people, they get twisted around by patterns and they need to have a good GPS. Now, pitchforks is one thing, but when we put our readings to it, basically we are cooking with gasoline. So here's the information on the manual. It's called The Art and Science of Staying on the Right Side of the Market. It's $60 for now. Deal directly through me. Send funds from your PayPal account to lucaswaveman@gmail.com or request an invoice. Mention this video for the discount, as it will end up being more at beyondthegoldenspiral.com, and it's not going to be on the website until at least the first of the month. So this is like a pre-sale discount, but I'm going to leave this price at $60 for anybody that mentions this video. Finally, our disclaimer. Contents of this work is not guaranteed to produce profits. No claim is made. The ideas or methodologies discussed in this work will result in profits and will not result in losses. This information is for educational purposes only. Commodity, futures, forex, and stock trading is risky and not suitable for everyone who views this content. This work is designed to provide authoritative and accurate information in regard to the content. What is discussed here has been reliable in the past, but no guarantee by the author. Author's agent, distributors will be reliable in the future. Every trader is responsible for their own actions and decisions in financial markets. The contents here are not considered to be an offer to buy or sell any security, stock, or futures contract. With the understanding that author, author's agent, or distributors are not engaged in rendering any legal, accounting, or professional services. Viewing or purchase of any of these contents constitutes you agree with this notice and exempts the author, my agents, and distributors from any liability and or litigation. So that's about it for this time, folks. If you have questions, get back to me at lucaswaveman@gmail.com. And thanks.